Yeah, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, May, how are you doing? Happy Friday.
Happy Friday. It's actually Saturday morning for me.
Saturday. You're
Yeah.
overseas this week, aren't you?
I am. I'm going to be here for about a month. I'm really stoked.
Oh, wow. Well, I appreciate
I'm going to Deloitte.
I appreciate you taking a few minutes out of your travels to join us. Did you see the news that hit the wire after the market closed here?
About the debt holders? Yeah.
Yes.
Thanks for sending that to me. I appreciate it.
Yeah,
I think it's great. I'm really stoked about it personally, but I don't know. What are you thinking, or should we just take questions, or?
So my initial thought was we already knew this was coming, right? That they were going to restructure the debt. You and I and on live streams have talked about this many times. And my thought was always that it would happen by the middle of this year. You thought maybe closer to the end of the year. And we still don't know, right? Just because a press release came out that the lenders had a phone call. We don't know timing on anything, right? But the point is, we knew this was coming. I was a little surprised, though, that we get the news in this way, that the lenders are having a sit-down discussion to present an idea to AMC. So how does that piece of it hit you, with you being a little more familiar with that world than I am?
Okay, so for me, this is how I'm reading it. You have originally, these one-off discussions of management going to each debt holder, or the debt holders reaching out to management independently to negotiate one at a time. But every time they do it, it impacts the total valuation of the stock, right? Yep. So let's say December of last year, the first dilutions that were done with Antara, they were done at a much higher price than the ones here. All of them know, okay, you're a debt holder, you're not dumb. You know that basically dilution, some portion of dilution is going to be required in order for them to manage through the writer strike and everything else that's happened. At the same time, you do have a company that, if you remove the debt portion of it, is actually recovering. So pushing it into bankruptcy and you sitting there with 2L debt, knowing that first lien gets back, that's just a dumb move if you're a debt holder. But also dumb move is to let every other debt holder get in front of you trying to negotiate. Your best bet is to negotiate as a group. So when I'm reading it, that's what I'm reading. I'm like, oh, okay, the debt holders finally wisened up. They admit that they're definitely going to get diluted, or dilution is going to be some portion of the solution. And remind you that dilution does suck short term, but if it saves the company from going bankrupt, it is the right financial call. If they fail to address this debt issue before 2026, then literally the last 2 years of the shareholders trying to support the company would have gone to waste. Okay, so I get that some of people are just pure MOAS. They don't care about AMC. They're in it for the money. I get it. Listen, no shade on that, because that is a real strategy. That is a real way people invest. That is a real thing. No shade. Okay. And then there's a set of investors that were like, I want AMC to be around for my kids. I'm going to support this company. So those folks, to the extent that they have been sitting here, not selling the stock, removing it from the ability to be hypothecated, et cetera, if this didn't get done, then those people's actions 2 years ago would be in vain. So I actually do think that this is a positive. Will it dilute in the short term? Yeah, it will. the dream is, and I'm going to go ahead and say it that way. I know people will totally mock me on this. The dream is that you get past this debt issue and you start to get the box recovering. It looks like now it doesn't need to be 11 billion. It could be 10 billion. If you look at what EBITDA looked like, what cash flow looked like, operating cash flow, subtracting out, and you hear him say on the call capex is going to be at 250, then those numbers actually work great, right? You have like 500 million to 600 million in operating cash flow, 250 in capital expenditures. You end up with a 400 something $1 million free cash flow. If you can get past the debt portion of this, that's a decent, reasonable business that can absolutely survive. But for the fact all of the cash right now is going to debt. So my suspicion is the debt holders are going to try to do one big group negotiation. We don't know what'll happen. Will it suck as a stockholder for the short term? Yeah, but you should already be aware that it was going to suck as a stockholder for this year. Every single time I've communicated ever since the reverse split, I've always said this thing will be volatile until you get past this moment. And then we actually get to see what the true earning powers is. Now I've droned on, so I'll pause.
So
I'm not just
I want to hit on a couple points you said and ask a more probing question. So I had already said to my Discord a couple hours ago that if they're all sitting down at a table, at least the 2L lenders are going to be there, not pulling for Chapter 11, right? There's a lot of ways you can restructure the balance sheet. Chapter 11
there absolutely
being
is.
one, but all of them in a group. You would expect that if you're holding unsecured debt, you're not going to be advocating for Chapter 11. So I think they're working for a solution that works for everybody, the company, the shareholders, and the lien holders.
Yeah,
But I want to touch on something you said, because I've already talked to some people, and the most bullish people are hoping that, this meeting means that they're just going to restructure the debt to 2028 or 2030 and no dilution, just push it out, and that's it. So you mentioned dilution quite a few times in your monologue there for the past couple minutes. Can you explain your thoughts on why you think that this meeting or the outcome of it would include some dilution, and in what form that might happen?
There's a lot of different ways they could do it. In my dream world, the way they'll do it is they'll structure it as convertible debt, so you don't have a massive change in interest rate. So convertible debt could be convertible at a price that's higher than it currently sits. The issue is this: if he keeps doing these one-offs, then the dilution will continue, and it'll just be like this, like massive water torture of what's going on with the equity. But the debt holder also takes it on the chin, because if you think about it, given how silly some of the commentary has been as far as suing the company when the stock was 10x higher, such that it can't go ahead and take the dilution hit there. I mean, the issue that you have is you have a lot of really bad investors, with all due respect, sorry, not this group necessarily, but you have this crazy group of investors that believes that what they should do is talk crap about management and talk crap about everything the company's been trying to do to finance itself, therefore pushing the stock price lower, making it impossible to refinance itself, right? If you go back, if you dial the clock back, the real issue was the corporate bylaws didn't allow you to do a certain type of dilution. And if you'd taken the hit, then you wouldn't have nearly as much dilution. That's the circular irony that drives me nuts with the shorts in the stock, is because their logic is actually self-fulfilling. It's nonsensically self-fulfilling. Not to mention, they never seem to get upset at the lawyer, who I doubt owns one share of stock at this point. Okay, I've said my piece. Thank you.
So yeah, you were touching on the fact that we didn't approve, or they didn't put out for the vote, because they knew we wouldn't approve the dilution back in the middle of 2021, right? The last one that they needed to get them over the hump. And so that was our fault. Even I was against the more dilution, because at that point I thought we still had a chance for a second squeeze, but then that didn't happen. And as we moved into 2022, we started having to say, hey, the company's burning cash, the box office isn't there yet. We need to start talking about the financial statements. and we need to start paying
Yeah.
attention to that. We made that shift, but a lot of people still haven't made that shift. They haven't understood the income statement, the balance sheet, the $2 billion negative in working capital, the free cash flow issues, and they're still stuck in thinking that everything is the board's fault or the executive's fault when they are actively trying to avoid Chapter 11. And just unfortunate that when we're speculating in a money losing company, that the ways to solve that problem are not typically going to be in investors' favor. There's only a couple levers to pull.
There's only a couple levers, but you have to go through the tunnel. You know, it's kind of like it's like a classic thing of just trying to avoid the one thing you have to do. But on the other side, if you look at how the cash flow statement lays out in 2018 or 2017, and you realize he stated on earnings this quarter, the capex will be no greater than 250, but most likely closer to 200. When you do that math, operating cash flow at 400 plus, quite frankly, so you've got less theaters, but you've got greater profitability. You end up with a company that's throwing off $300 to $400 million. You got to get through the tunnel, though, and there's only one way through the tunnel.
The other conversations that are kind of bouncing around in the hallways, May, is like, well, what if we have some movies outperform this year, later in the year, because we know Q1's going to be bad. I mean, we can already see the box office. I've already run the numbers for every quarter this year, and I have Q1 dialed in pretty accurately, but Q1's just not going to be pleasant. We only, and I'm seeing as many movies as I can in the next 10 days, but it is going to be what it is. So we looking forward. Q2 is going to be, so Q3 is probably going to be pretty good, maybe even a profitable quarter. But people are saying, May, what if we outperform later this year? And my thought, and I want to hear your thoughts, my thought is it doesn't matter what the maybe is later this year. We got lenders in a room talking right now about today. That's my thought.
This is what I would say. If the cash flow is better than we expect, amazing. Because guess what? When that debt is gone, you can start buying back stock. Okay, everybody out there pretending like whatever. It's not like companies financing is dynamic. All right. Once right now, the thing that's stopping any stock buyback, any whatever, is number one, it's not a good use of cash given that you spend in capital expenditures 250 and you only have EBITDA of 41, mostly because you're spending almost 200, you're spending almost 400 in debt interest payments. Okay.
Yeah.
So if you can work all of this out a bit, such that's why I'm saying a convert would be ideal, because if it actually converts, if you actually end up with a lower interest rate, which you can do because some high yield convert debt is actually done at 7-8%, even lower. I mean, just take a look. So if you could actually get that 12% down, have some dilution such that you have lower interest payments, you still have the ability to buy back some of the other bonds at like 50%. I think like the 2026 subs. Well, here's the thing. The only challenge is the minute they restructure, those bonds are going to trade straight up. Just FYI, if you're a bondholder, that's just truth right there. As soon as this all gets restructured, provided you don't own certain bonds, like they're not going to restructure. So like I have the 5 and 7/8, I think is the coupon on mine. There's no damn way that they're going to restructure that, because that is in favor of the company in an amazing way. Also, the 6 1/4, I think it is. I don't know, something like
6
that.
1/4, 2027. Yeah.
Yeah, those probably aren't getting restructured because that is a beautiful rate for a company that's CCC rated. But a lot of that stuff will trade up. How much it'll trade up, hard to say. But if you're able to get a decrease in coupon off the 12% rate that currently those 2Ls are trading at, like it just shifts the entire income statement, balance sheet, and cash flow statement in a really beautiful way, giving the company potentially a chance. Also, if you term out debt, it's the same thing. If you term out your mortgage, you're going to actually lower the actual coupon payments that are due. Right now, the coupon payments are due in a 2-year time. Well, I mean, they were struck when it was struck, but you know what I mean? Like it's you owe that the original principal on that was much higher. They paid some of it down, so when they go to refi it, It's a different principal number. Anyways, hopefully that all made sense the way I said it.
Static says, ask why these two talk AMC. It would be much better if they didn't. I own more AMC now than I did before the reverse split, and my cost basis, Mr. Static, is damn near close to the current price. So you're talking to an actual shareholder, just like you. I don't own any bonds. May is more of a bond trader. Do you still own shares, May? I know you had bought
Yeah,
some
I do.
too, but
I always own shares now because I always want to be allowed to vote. That's
yeah.
really what it
So
comes down
we're
to.
shareholders. That's why we're sitting here and we're talking about a company to provide you guys non-emotional, non-conspiracy, financial-based coverage. If you don't like it, there's 40 other channels where you can hear about billions of synthetic shares and how bank failures are going to save you. So just go ahead and tune out. For the rest, let's keep moving. May,
Yeah.
if you had your ideal scenario of how a convertible if the deal was the convertibles, would they
What's that?
if the deal that the lenders proposed to AMC were AMC to take it, if it was convertible, would that in your mind also include paying down some of the debt that's on the balance sheet, or
Um,
just trading it for new debt that's extended on a time frame?
I mean, I don't. I think that the most likely thing that you could get the bondholders to agree to is some conversion higher than the current stock price with a lock. With a lock. Hold on. Can you guys still hear me? Because I ran out
We
of
can,
battery.
yeah, we can hear
Okay.
you.
It would be like, I mean, this is what I would try to negotiate for. I would try to negotiate for a lower interest rate with a conversion factor at a higher price of the stock, which aligns the debt holders with the equity holders and management. And I mean, I don't think that they're going to be able to get less debt, like because if by definition, if they're going to convert it to stock, do you see what I mean? Like it's not going to, they're not going to, like, that's an aggressive ask. What I
All right,
think they,
I was just curious. I'm trying to think ahead what questions people might ask. So
yeah, no, it's a good question, and I could see why someone might be like, would they just take? But it's gonna probably, like, my guess is it looks a lot more like the last piece of the last renegotiated piece that was done in December with was it Antara's debt or was it someone else that they negotiated with? I don't know if we saw it.
they don't always tell us in the I just see the same press release as you guys see.
Yeah,
Blue
I don't
Sky
know.
Lands
Some of your guys are really good at digging this stuff out. So I'm just, you know.
Blue Sky says I think they want to take over the company chapter 11 and the debt holders own the company. That's where this is headed. Well, keep in mind there's some debt holders that are first lien holders and there's a bunch that have second liens which would get nothing in chapter 11, and they're not going to be in favor of pushing a company that's on the brink of success into chapter 11 and getting nothing. They're going to be at the table fighting against that, wouldn't you think, May?
Yeah, I mean, chapter 11, I don't know why everybody believes that chapter 11 is this pleasant, wonderful thing. Chapter 11 is only a pleasant, wonderful thing if there's something that you get on the other side of chapter 11, because you have to literally hire an expensive lawyer to go, or you're a lawyer. Then you have to fight it out for about a year. You have to figure out how to get all the debt holders to agree to whatever it is you think is whatever they believe is their cut. And then usually somewhere between a year plus later, you may or may not have some portion of your money back. And just so you know, like, I don't know if people ever looked at how long it took for Kmart to actually unwind or Sears to unwind. It took freaking forever. Okay. And also, because this company already underwent the transition to operating leases asset light, there's not even really real estate. There's just operating leases on the other side of it. So if you were going to convert the operating leases, you don't need to go to bankruptcy to do that. You could actually just do that with the actual landlord and then get out and then break the lease or something like that. It wouldn't make sense. There would be no, like,
there's
what
just
do
a
you
lot
get?
of people. There's a lot of people with
You
the
get nothing.
axe to grind now, May, because they're angry, and so they've converted to what I call the dark side. You know, everything for them is a gloomy cloud. Oh well, they must be trying to force bankruptcy, guys. They've had
Oh,
4 years now to do bankruptcy just by doing nothing, and I've been reading through again the 900 pages of this past week, the 900 pages of the discovery documents, where you can read through the board meeting minutes from 2020 and 2021, read through those and tell me that this was not a board actively trying to figure out every possible
Every
way to
possible way
avoid
to finance this
bankruptcy.
thing.
I
That's
mean,
what
guys,
makes
there's literally hundreds of pages of actions they were doing to avoid bankruptcy. If you haven't read that, I don't want to hear your comment about someone's trying to force bankruptcy or just roll over and let it happen. They are not doing that. They could have just done nothing. It would be so easy. This company is fighting. And the unfortunate thing is, if you're a common stockholder, we're paying the price, right? Because the company's not profitable and they need liquidity.
Yeah. Now, your boyfriend's wife is saying franchises take over some of the theaters. I actually agree with that. The only challenge is that, so they did that with the Saudi theaters. You'll see that, I think, from last year's 10K. And so they did get a bunch of the Saudi theaters franchised out. I actually really like the idea of franchising out the theaters, particularly in Europe, not necessarily in the US. The US, I think, is a bit more profitable than Europe. Europe theaters are kind of their own animal. But yeah, franchise is a real thing. You know, if you look at Marriott and Hilton in the 90s, they did exactly that. And they own now about, both Marriott and Hilton only own about a third of their properties, maybe even less than that, quite frankly. I could be wrong. But franchising is a legit, even lighter asset light, if you will, because then you don't even really, you're really just passing through the lease, and then you're passing through all of the AMC product.
And I know that they've
okay with
looked
that.
at, I mean, they overturned just about every stone I saw in those board meeting minutes. I don't remember seeing franchising being mentioned, but I'm not quite through my latest reread of everything. But they talked
Yeah.
about everything. They talked about selling off Odeon. I mean, they are planning out always 2 years ahead, both the cash flow bridge, where they're going to fall short, if they're going to fall short, and what things they need to do to not fall short. And if they
A
see no
real
way out of
company
it,
would.
yeah, I mean, these guys aren't just sitting around letting this happen. They're actively working, from what I saw, and
Yeah.
I imagine that's still happening. And guys, and may correct me if I'm wrong, but this is mostly the CFO working with lenders to this is the CFO's job, right? Everybody blames Adam Aaron. He's the final guy to sign off on things, but this is really the CFO's domain, right? Figuring this
I
stuff
mean,
out.
it's a little bit of both, because you're a good CEO. Like, given that the major issue right now is really financing more than almost anything, right? Because if you think, like, operationally, they've cut every bit that they can. And if you look at, like, I mean, what did they do? Like, I think they were right at 200 last year for capital expenditures, 200 million. That's like
225 ish, I think.
25, like, it's pretty low, you know. So they've cut as much fat as possible, you know. Setting the trajectory of new deals and you know, he's done that. But the other biggest thing when you have a company like this is the financing side. So it would be a collaboration, and it kind of makes sense, because if you look at, like, who the CFO is, and a huge component of the board composition, as well as Adam Aaron himself, you know, they all have, like, strong let's call it creative financing backgrounds, because that's what this company was ultimately going to need. Even back in the day, if you look at, like, when he was brought in, the company was doing okay, but the problem is that the theater business itself wasn't necessarily going anywhere as relates to shareholders. So you really, you know, the idea of doing a roll up strategy when debt was at 2%, it just wasn't crazy. And in fact, I literally, like, I get that. I get that some of these things in you know, if I'm talking to my New York finance friends, it's like they can even name the year that he must have started the roll up strategy, because that would have been the year that debt financing was a certain way, and that a roll up strategy would have worked. So it's
2015, I think, is when they started. 2016 was kind of like the
yeah,
end of it.
yeah.
And I'm also thinking that this new board member they brought on, I forget her name off the top of my head. I'm trying to Google it, but she has strong finance and CFO experience as well. And I'm kind of thinking that might have been a strategic add to help get them through this exact time that they're faced with right now.
Yeah, this is 100% a banker's turnaround because there's nothing like what else can he really, you've got these new objectives. They're doing the best they can with it. It is, I actually think that the distribution business, which I hate calling it the distribution business because their entire business is a distribution business, but I get that that's what the straight has latched onto as a name for it. But my argument has always been, what is the film business if it's not film distribution? Like all of it's distribution.
Well, we call it direct distribution, where AMC, cuts out the middleman.
Yeah.
Let's just agree to call it that, just so we have a term. Direct distribution. Yeah, and we haven't heard what plans they have for that this year, but that would be a sweet adder. I have my spreadsheet and my cash flow and earnings for every quarter this year are already mapped out, but based on what we know. But if we get some sweet adders, like some direct distribution deals, another big concert or 2 or 3, that changes the dynamics a little bit. But those, again, are things months down the road because we don't know of any right now. And what I was kind of talking to people earlier about today is, doesn't matter what happens in Q3 or Q4. The lenders are in the room right now. And we might be hopeful as common shareholders. We might be hopeful, but they're taking a more strategic outlook, and they're not going to just sit there and roll the dice on hope, right?
Yeah, the reason I was mentioning it is because there is actually something that I think still could be evolving, and that is, film financing. It's a small thing, but it's a real thing. And so, if I were on the debt holder side, I would try to ask for first look on all debt, on all financing for those films. That would be the only other thing that I might ask for.
Sorry, my wife just got home, so I was trying to tell her she needs to feed all the pets. All right, time to feed all the pets. I've been busy. I've been busy crunching through news and everything, so I'm slacking on my household duties. But at any rate, let's see what other questions we have here. How are you on time, May? I know you had a.
I'm okay. I moved it's 9:30 in the morning here, and I moved my 10:30.
Okay.
Going to a meditation center.
What country are you in right now? Still Vietnam?
I'm in Vietnam. I'll be in Vietnam the entire time. And I'm in this beach area called Nha Trang. It's like growing, which they pronounce Nha Trang, something like that. I don't know how to speak Vietnamese. They're so sweet here. But yeah, it's a beach town. It's really hot here. So usually I'm waking up at the crack of dawn because I'm also trying to get fit while I'm here, and it's warm and I don't have, and plus everything in Vietnamese is I'm a size large in Vietnamese, so it's very inspiring to try to get the pounds off.
I saw that you were doing some clothes shopping over there.
Every time I go shopping, they're like, "Oh, big size." It's so upsetting, but it's okay. It's good for me.
All right, let me see if I can bring up if Blue Sky has a question here. I'm going to read his comment. He says the movie industry is in a different place. Media companies have changed, and I don't see things returning to an environment pre-COVID. That's the whole debate going on right now, in my view, between the Bulls and the Bears. You either think the movie industry is going to recover somewhat, although everyone, including the executives and even my own independent analysis and other people that I talk to that are doing independent analysis, say that we don't need to hit pre-COVID box office levels. I have it at about $10.1 billion for break even. So it might not return to pre-COVID levels. That is your guys' decision to chew on and decide what you want to do. Each one of us has to struggle and decide on that. What do you think, May?
I agree. You could do it you could think pre-COVID levels, or you could just look at the cash flow statement, removing the interest and all the extra restructuring charges, and use that number. How about that?
How about that? That's why we're sitting here talking financials.
Right?
There's just not enough people breaking that down for folks, and we keep hammering that home. but they want to talk,
right?
they're focused on naked shorts and Gary Gensler. It's really simple, guys, just to look at the financial statements and see what is happening and
Like,
what the potential is. The problem is getting here from A to B, and we got to tackle this debt. At least, the lenders are already, the talks are starting. So as an investor in common, this is something we need to not stick our head in the sand about, that is headed our way.
yeah, okay. So, like, just to help people a little bit, the reason he keeps giving you EBITDA is because EBITDA removes restructure. The difference between EBITDA and operating cash flow, you've got restructuring charges which go away once the debt situation is resolved. Depreciation and amortization, they actually still have. So it removes depreciation and amortization. So that is going to be like EBITDA and operating cash flow get really, really close once you don't have the mess going on. That's why he keeps giving you EBITDA every year, right? That's actually the cash that's thrown off before capital expenditures. And then he gave you the CapEx number. So last year we had a writer's strike. Okay. So even if you think that the theater business doesn't return to where it's at, do you think it's always as crappy as the period that we're going through right now, which is due to the writer's strike? Or do you think
Some people are going to say yes, but they're not looking at all of, like you said, the restructuring charges, the deferred rent, all of the extra charges that will
all
be
these
going
terms,
away.
all that, yeah.
And if you restructure the debt and get a lower interest rate, even more potentially going away, which is what you started out this conversation talking about, is that the cash flow could be there if this is done right.
Yeah. I mean, I think immediately, so the way that I'm seeing it is, first of all, I'm not interested in like just being really high turnover on this. And I get that there are people that are more traders. So if you love the velocity with which this trades, you still should be, even after this debt is restructured, you probably still have some fun to be had, let's call it, because the debt will get restructured. Then you'll have a call that talks about what it means for the debt to be structured financially. You'll have them probably, hopefully, knock on wood, if we're lucky, recasting what actual would be the projections for the year, sans the debt, sans the restructuring, sans all of that. And all of that creates a lot of events that you could still have fun trading this on. Then you still have to have recovery of the industry. So yeah, it's even with the restructuring, which is great, you're going to have still a volatile stock until you get through the impact that is residual from the writer's strike. So that part is true for the day traders. You can still have a lot of fun with this. But if you're more like, hey, you know what, I'm going to try to support this company and accumulate the shares, you want to keep your dry powder through at least, I'm still not going to change the way that I'm supporting the stock. I'm still going to keep dry powder because the thing's going to be so volatile as these pieces get worked through. Like,
Yep.
Even right this minute, you don't know what they're going to restructure it at, what the exact terms are, and what the dilution is. Just like on the other side of it, you don't necessarily know yet what the cash flow will be, because even like 2024, if it wasn't for the writer's strike, we would finally get the answer to what does the movie business look like in an economy that is still experiencing massive inflation, that still has all these other things. Remember, Europe is the international business. It's not a small business for AMC. And as much as we want to just use the US as an issue, Europe's inflation, Europe's issues on its economy are worse than ours by a lot. So like Europe, even if you're like, oh, the US has been fine, Europe has not been fine as relates to the individual people and what they're experiencing on their pocketbook. So AMC has been operating and would have operated this year with a weak Europe and whatever weirdness, but then we got the writer's strike. So whoever's doing their estimates, good luck to you until 2025 to really truly get what a true revenue and earnings would be. Hopefully that made sense.
I think that dry powder comment is a good one. I've been talking to the folks in my Discord about that for a couple weeks. Like, there's multiple strategies depending on your risk tolerance and what you believe. There's all sorts of things that could happen. You got to decide what you think is going to happen. But dry powder, in case of more dilution, is one of the strategies. And I had that with another person that just randomly DM'd me on Twitter. I said, one strategy you might think about is that dilution could happen later this year in some form or fashion, in which case it might make sense, if you're determined to be an investor in AMC, to have some dry powder, because you might get a chance to buy it cheaper.
Yeah. And I would also mention again, convert if knock on wood, they get a convert. The conversion price could be higher than the current stock price, which will cap where the stock goes to. For the MOAS people, that might really piss them off, but it is what it is. Um, but but it would also lock those shares from being able to be done in some crazy way. Now,
Right.
one thing with a convert is that usually someone with that particular experience will then tell you what people are doing to hedge the conversion itself. And they don't have to hedge it necessarily if they just want to take the interest rate, call it a day, and it is what it is. But because of that, if this ends up being a convert, there will be awkward, let's call it, trading activity associated with that. If you're confused at how awkward that trading activity can be, SoFi, which is the other one I know you and I have to talk about at some point, just issued a convert, which, by the way, lowered the interest rate going forward, or removed the interest rate on the preferreds, and then also had a certain amount of dilution. It was a 1 day of dilution, and then the stock bounced back, which it should, because quite frankly, their cost of capital went down, their profitability will go up, and c'est la vie. Do you know what I mean? So realize that's part of the reason why I would probably retain dry powder in front of trying to understand what it is, and then allow it to settle to figure out what precisely is the total impact. Because if they do refinance it as a convert, there will be for sure both options and stock related behavior to try to hedge out the equity portion of the convert. That's very like advanced, and in fairness, um, there are people that are expert at that. I am not expert at that. I usually ask those people and then like do the math from what they tell me.
I'm not an expert at it either, but I have watched a lot of money losing companies trade through converts, where they have lenders that have converts. And so we have a little bit of experience in the retail trader world of dealing with these companies, but I haven't been in one where I was holding the stock and then a convertible got dumped on me. So that's something I'm going to need to think about over this
Yeah.
weekend. But as if it, we will have people experience to talk about what to expect if it goes down that road. And that's just kind of the thread of where we ended up today's conversation, right? We don't know for sure that it's going to be a convertible.
Yeah, we don't know.
There's
They could just refi the debt. We could get really lucky. The debt holders could be like, oh, you know what? We'll just push it back. All of that is true, because a negotiation is a negotiation. And depending on who the debt holders are and how they feel about it, and you might even get new debt holders coming in as a function of it. It's really hard to say. Anything could go.
Yeah.
And I just want to tell you, this is not water, guys. This is iced coffee. You guys are hysterical.
But iced coffee is made with Vietnamese water. Is the water safe to drink over there?
That's true. I'm actually pretty resilient because I'm a nomadic person.
Okay.
Plus, I have like all kinds of stuff for the stomach. I don't have issues, but this place that I am at is it's more of a hotel resort type place that I'm sitting at near the beach. And strangely enough, Nha Trang, actually the eco, like Vietnam has a long way to go, but they're making a huge push to become like eco-touristic, eco-friendly. I try to post stuff on the economy of Vietnam because I'm a nerd. I can't help myself while I'm here. But they do, and I'll post footage of it later on my Twitter, just if you guys could see it. But every morning at 6 a.m., they have a group of probably like 100 volunteers. I don't even know. Maybe some of them are paid. I don't know. And they literally go through the entire beach picking up everybody's trash. It's crazy. It's like this ridiculous crowd of people right at sunrise picking up trash.
Well, that's good. At least it keeps the beaches clean when the Americans come over there and trash it.
Yeah, it's pretty amazing. And it's cool to see. And I'm like, I guess that would be like a really nice way to, build community and meet other people. If you're like, a young Vietnamese person trying to meet a nice person or something like that.
Well, let's try and take one or two more questions, and guys, just to make sure we go over the bases. I already ran the pre-roll before the video started, but May and I are not your financial advisor. We don't have a crystal ball. We're just here sharing opinions about what could happen. There's a lot of different ways this could go. It's up to you always to make your own assessment, gather information from multiple sources. If you're not capable of understanding or making decisions on that information, then talk to a professional.
Yeah. Okay. What other questions we
What
got?
other questions you got? Blue Sky he's got a lot to say today. He says dilution is working. The market cap is going to head below 1 billion. I mean, guys, look, I did a video yesterday and I didn't publish it, but the exact thing I was made the video about, May, was AMC's historical market cap. And looking back, 2015, 2016, before they did the roll-up strategy, market cap was 2 to 3 billion.
Yeah.
And then they had that, I think it was ASC 842 in 2019 that forced them to put all the leases on the balance sheet, and the market cap got crushed down below $1 billion. And then right after that, 2019 COVID hit, and we went to 500, 600 million market cap. But let's just say historically, around a 1 billion market cap is a normal place for AMC.
Yeah.
When it was profitable, pre-2016, 2 to 3 billion. So we had a FOMO or a short squeeze, whatever you want. We've reverted back now to about the norm. And I feel, until and if something happens, which it looks like it's about to, that $4 and a 1 point something billion dollar market cap is probably what the market sees as a fair market cap.
Yeah. I mean, I would encourage people to think in terms, especially with all of this debt refinancing, I would encourage people to think in terms of enterprise value to EBITDA, because that is actually, or even enterprise value to earnings. I don't care either one. But enterprise value incorporates the debt in the total valuation of the stock. It's actually, to the extent that you're buying a stock, it's always the case that enterprise value is a good representation of what you actually own, because you buy the debt too as an equity holder.
I'll see if that's a good idea. I'll see if I can get maybe a more layman's explanation video out on that this weekend.
On enterprise value, yeah. Because if they're going to refi the debt and then as a function of that be able to pay it down better, let's call it like that, because just by virtue of there being more cash. Because even if they refi this debt, use of capital to pay down debt is still a real thing. So that's gonna drive how you think about valuing the company. Because imagine this, like a lot of you guys, when you get really over exuberant, let's call it, when you get really excited, you start to talk about someone taking over AMC. And that's when I usually am like, guys, if you take over AMC, you have to pay their bills. Okay. It's kind of like some of you guys who have dated someone who has a lot. Of debt. Okay. You know what I'm saying? It's the same thing.
When we're talking about someone like Amazon wanting to buy AMC. Yeah. I mean, it doesn't make sense to me because there's too much debt right now.
Yeah.
And there's no positive cash flow.
If the debt comes in, then you can really think about, okay, well, I have enough cash to cover that debt. And then this thing actually does make money if it weren't for the interest payments, then the economics gets really different. That's why I think enterprise value becomes really interesting with companies like this as they come. Like, a turnaround takes time. And we are really in that still first inning of like in comparison, GameStop, which I know a lot of you guys love, is past that first inning. They're in the second part where you really want to see profitability happen and then scaling that profitability. It's weird because they're kind of still in that first inning, but you're starting to see elements of the second part. The major thing that would take them out of the first inning is the debt. And then you'll start to see the operating leverage that's been improved. What does operating leverage actually means? It means like you get more profitability for every dollar that comes, for every customer that comes through. You look like you're about to die over there.
Yeah, I was telling you before we started, I made stir fry and I had garlic and onions in my stir fry, and I think I got some onion juice in my eye. I
See, this
probably
is why your wife is important. She shouldn't leave you to the cooking.
it'll just give people another chance to say he looks like he's high. He's look at those red eyes. No, I haven't smoked, haven't drank, but I do have onion on my freshly chopped onion on my fingers. Anyways,
Makes you appreciate her cooking even more, right? Like that's
she was at a yoga class, so I had to fend for myself.
oh, okay, awesome.
Candace
Awesome.
says, Tony, did you see AMC GameStop? DWAC had all funds must be settled. Yeah, I did see that. People talking about that. Just I don't know if you saw that. There's certain lenders, if you have a cash account, they're not crediting you cash if you wire it in or ATH it in. They're saying you're going to have to wait the 2 to 4 days for it to settle in your account before they will let you trade some of these meme stocks. And some people are upset about that. I say, look, if you're upset about it, find a broker who doesn't have that policy, or get a margin account. Get a margin account.
Or go with
So
a broker where your cash account, like, so for example, let's say Charles Schwab is your broker and you have a bank account and the other account, that transfer from Charles Schwab to Charles Schwab won't have a problem. It's, to be fair, I'm actually shocked that they let you do it before, because traditionally, like, let's call it back in the day, your stuff has to settle before it's actually hit your account.
I
So
know that's why I didn't talk about it. People are making it into a big deal, but guys, it's really not the deal that people are making it into. And if
the
it
big
bothers
deal,
you, change brokers.
yeah, and the big deal is really more that they let you do it in the first place, to be
Yeah,
honest. They
that's
should.
what got Robinhood in trouble, was allowing people to trade money that hadn't even cleared yet
Yeah.
back in 2021. Because then what happens? You buy a stock and it runs down, and then you say, well, screw that. I didn't really have the money in my account anyway. So, haha.
Yeah.
That's the risk these brokers are trying to mitigate.
Yeah, that's why I'm not a huge fan of Robinhood. You really shouldn't have been doing that period in the first place, to be honest. That is so dangerous, especially if you are going to target specifically people that that aren't hugely liquid, relative to, I mean, I think everybody should have the ability to invest. Everybody should have the ability to do, like, whatever they want to do financially for themselves. But I think broker dealers that think that the US is the Wild West should move offshore and stop trying to pick off people that are still learning finance and in the most amazing way. Because I do think, like, I've been really amazed and impressed by how much people are trying to take ownership of their own finances and try to grow it. But
I'll be right back, man. I'm going to get some eye drops and wash my fingers. And so go ahead and take a question or two.
right, you can't buy on margin or on unsettled funds. True, especially sell stock A. It can take 3 days for funds to clear. Can't buy stock B. This info is off. Okay, Davey out. I'm not 100% sure. I totally understand what you mean. But yeah, usually, the settlement of funds is actually, Drockstar, you're so funny. I made him cry, Drockstar. That's right. Okay, so settlement of funds is totally not the broker. It's the settlement and clearing houses, and it can actually take even longer than 3 days. Strangely enough, like if you've ever tried to move your money from fund A to fund B, especially during COVID, I think I tried to switch brokers on my IRA account. It took a month. All right, it was Morgan Stanley. It was even some like backwater broker. So settlement issues are always a thing. Have always been a thing. It kind of is what it is. You can't really blame the broker dealer, but the broker dealer should be taking measures to risk manage cash settlement. It's very basic, which is why I said that I think it's really messed up. Robinhood, even like the anomaly isn't that they're not letting you do it now. The anomaly is that they ever let people do it in the first place. So what is the deal with the upcoming T+1 in May impact on trading activity?
All right, I'm back, but I'm going to keep the camera off for 60 seconds while the eye drops kick in, because I'm going to be blinking here.
Okay, the T+1 settlement, there's a few things that are actually kind of good about it. I do think that the first part is that your stock clears in 1 day, which it should. I mean, you know what I mean? And the biggest impact of why that's relevant is if you are trying to hedge something with options, you own the stock, and then you like, let's say you're doing a buy right, okay, so you own the stock and you short calls against the stock so that you have a defined risk hedge. Let's say on something like Nvidia, then you could technically have them clearing in different ways. That's stupid, with all due respect. That shouldn't be the case. Now, I think the more interesting thing is that everybody is curious about is, what does it do for the FTDs? Because, you know, I've not been a fan of the gamesmanship using Reg Show, and so I do think that there's extra. I do think it actually makes it a little bit harder to game it, but I don't think it eliminates the gaming of Reg Show. I think the SEC has to go in and modify Reg Show is really what it is, to specifically address the gamesmanship of, let's pass around who's in violation of Reg Show on the or whatever.
We need more transparency on that, and we're going to keep beating
Yeah,
that drum. But guys, it's going to take likely years, so
yeah.
we can't give up, and we need you all still here, profitable amongst your various plays, to stay in the game and help us make noise, to ask for more transparency on failures to
Yeah.
deliver in Reg Show.
I think the two things, like this T+1 definitely is like, if we're talking about we're going to grind slowly to force out some of the silly and Reg Show, even though it doesn't get it all, because you got to think like it's kind of almost like the Al Capone, like you kind of have to get him on tax evasion versus actually coming at him so directly. So T+1 helps a little bit. And then the other thing that helps is the whole filing of the filing requirements that they've adjusted to try to give a little bit more transparency to what's short. So those are the two things that were done this year to try to get you closer to make it a little bit harder. There's more things that will have to be done. It sucks, of course, especially if you're in a company that like AMC is going to have people that violate the living daylights out of Reg Show. But, you know, I, I don't think it's totally fair to say the SEC is doing nothing. I do think it's a really hard job and it sucks. But I know a lot of you guys hate Gary Gensler, so I'm not going to go there.
And even no matter what the SEC proposes, the hedge funds fight against it or even sue them.
They do.
Right? It's. I wouldn't
Sometimes
want.
for the
I
right
wouldn't
reason,
want the
sometimes
job.
for the wrong reason.
I would
Yeah.
not want that job.
Yeah. Okay. What other questions?
Anya, how you doing? Dan, what's going on? Let me see if we have any questions from over on May's side. The one says, May, will you do a live with AMC Bigums? Have you
Sure,
talked to
I
Bigums
would.
before?
He's like a nice guy.
Yeah, he's a
He's never really
good
asked
kid.
me to do one though, or because I think he has more folks than I do. So it's really, I would be so lucky, sort of thing. You know what I mean? Like, it's the other way. Like I think we randomly started communicating. Then you were like, just come on and hang out. It's more like that,
May, I'm always looking for people that are smarter than me, and I recognize that in
That's
you.
not fair. That's not fair. You're pretty smart. Like, I have very
I
special
appreciate
knowledge that makes me sound clever sometimes.
I appreciate the bond knowledge you have, because I'm not a bond trader, and so it's good to have somebody to bounce questions off of. So
I
I
don't
do
trade them. I
appreciate.
just buy them and hold them. I have not touched those bonds.
I
I think they work through all of them.
I
think
have
they
been
all go apart.
I've been brushing up on my bond. I haven't really looked at bonds since let's see, the late 80s, early 90s, when I took finance and accounting. That's when you're younger, you're not really interested in buying bonds. But
Yeah.
I can certainly now, having dissected the AMC play every which way. I don't own any bonds, but I could see the allure to someone who's getting a 30% return in a much better position than the common stockholders who are facing dilution. If there were convertibles, you're probably going to come out better, right, as a bondholder.
I mean,
I
maybe.
mean, if the balance sheet is fixed, that's good for bondholders. Even for like a retail bondholder like you or me, if I was one or you are one, the balance sheet getting fixed helps those retail bondholders, right?
Yeah. So in a nutshell, I'm really, yeah. If I'm fair, like I probably get a little bit more of a pop than the equity does. because essentially um, the bonds trade based on probability of default. That's the first thing, and not limited default, by the way, which is what drove me bonkers that one day. You know? Okay, but actual probability of default of the bond. Nothing these bondholders are going to negotiate is going to cancel anybody else's bond, because that's just not. Oh, you can't. Like, you can't do that.
Right.
Otherwise, one class of bondholders would sue the other class of bondholders. Not even AMC at that point, unless AMC agreed to it, and then it would get kind of ugly. But technically, so if okay, so bonds can only trade to 100. That's it. That's the max. So there's never going to be a MOAS. I think that was a flower that fell down. So there's never going to be a MOAS per se in bonds. The closest thing you get is if something happens where the credit rating drives up aggressively. So right now, the 2027s trade around just under 60, right?
54.20, I think, is what I saw
Yeah.
this week.
Okay, so
Or
55.
52.40, something in that range. Yeah, low 50s.
So they're still trading at a pretty steep discount to par, meaning that like between now and 2027, if you want to do like very simple math, but if you're like a bond guy, you'd get mad at me for saying this, but let's just work with it. There's 3 years to 2027. That thing has to go from 50 to 100 in 2027. So call it 15, right? The 15 is because it's triple C rated. To give you a sense for it, there was other triple C rated debt that trades at 10. So if for some reason the thing suddenly wasn't triple C rated, I could see it moving to 70 really fast on the bonds. Okay, but probably not 70. It'll probably still get a disc, so 65. And if I bought those things at like, call it 45, then my bonds would move from 45 to 65 in a flash, which is a really huge return for a bondholder. That's what the bondholders that are not owning the 2025s are looking at. The 2025s right now are trading around 80, maybe. I don't know. You're closer to the screen, and
I just want to say, because I know there's people yelling at their screen right now, you're a bondholder, you're against the company. Guys, you can go buy a bond, and you don't have any power. May, do you have any power?
No, I gotta sit here like
it's just
else.
another asset, another way to own a part of the company. A bondholder like May or anyone who goes on to Fidelity or IK Interactive Brokers, you go find the bonds and fixed income tab and you buy it. You don't get any special privileges or power. You're just betting on a different recovery play of the company. So this whole notion that any retail trader of bonds is against the company, like I see people say that about May, you just don't know what the F you're talking about.
Yeah, I don't
Plain
think
and
it's
clear.
really not fair. It's really not
Now
fair.
you might have a case against the lenders who have the first liens. They have some power, right? But that's not what we're talking
That's
about
true.
when we're talking about
I'm in the
bonds.
sub debt. I got no power. If
Right.
this
When
thing
we're
goes
talking
bankrupt,
about bonds
I
for
think I
us,
zero out too.
we have no power. It's just another way to trade ownership of the company. It's very simple. So I
Yeah.
wish we could clear that up at some point by having some educational videos. But really, it's incumbent on you guys to learn and stop listening to people who don't know what they're talking about. I'm not telling you anything that you can't go find out yourself. You can buy a bond. You will have no special power, but you have a
Fidelity.
pretty
Yeah,
good return baked in if the company doesn't go bankrupt.
yeah. I mean, you can definitely buy them on Fidelity. I think some people have told me. Mine, I just bought through E-Trade. Because they have a whole bond section. You can always call your broker if you feel uncomfortable. They always love to sell you new products, so you should just call them and ask them. They'll probably educate the living daylights out of you. They may tell you not to buy high yield bonds. They're right to tell you that because there is
It's a high risk. It's high risk. AMC has a, what is it, triple C minus credit?
Yeah, if the bondholders were high on the hog, do you think that there would be high yield debt people telling you not to buy the bonds?
Yeah.
Like literally the subordinated debt, the bonds folks will often commonly refer to it as trading equity like, meaning I'm in the same camp as the equity folks as far as what needs to happen for the company to succeed.
for you to succeed, the company needs to succeed
Yeah,
as a
I
bondholder.
need them to not look like they're going to have any issues with paying back their debt. I think the only bonds right now that really don't have very much risk, especially with this new announcement, but are still trading kind of at a discount. And I mean, I know that people will argue this with me, is 2025. The 2025s, I think, are still trading in the 80s. And you really only have a year and change left. So they're still yielding like 20 something percent, but you have plenty of cash on balance. I mean, you'd really need another strike for them to run through the 800 million in cash and somehow not pay the 100 million they owe on the 2025s, which I think is weird, right?
Let's close this up with one other hard hitting question here, May. AMC has, as we know, at the end of the last quarter, about 880 million cash on the balance sheet. Their liquidity statement in the 10K said that they see themselves as a going concern for the next 12 months. So there was no going concern warning, no risk of impending bankruptcy. And some people might be wondering, if they have so much cash, if I understand, this year is not going to be great, but 2025, they're saying they could make a lot of money. If there's no risk of bankruptcy, if they have plenty of cash, no risk of bankruptcy in the next 12 months, why are they talking about restructuring the debt right now? Why are the lenders in a room putting together a proposal to pitch to AMC?
Oh, because no one knows what the Fed's going to do. As we climb towards the end of the year, you take the risk as a debt holder that rates go lower, not higher. So if you're a debt holder and you know that you don't want to push the company into bankruptcy and you kind of want to have a discussion about it, you're going to do it now before anything happens on rates. Because let's say rates actually go a lot lower, right? There's some people that think that. There's some people that think that rates are going to go higher. Who freaking knows? But if you're AMC and you have no idea what's going to happen to rates, you do nothing, and you just kind of sit there and negotiate exactly what's happening right now, because you've actually made enough progress where it wouldn't make sense for a debt holder to try to push you into bankruptcy, especially given that your book value is still not enough to actually ever allow them to pay back. Like if you played chicken with them, and let me tell you, you don't need to be AMC to play chicken with someone. I've had some of my female friends that own businesses. The debt holders try to do some BS with them, and they're like, all right, you want to play? Let's play. I'll take this thing straight into bankruptcy. What do you think? And then you run it. Do you know what I mean? Like, and then you tell me how you get it through.
So there is a scenario in your mind possibly where AMC could stall this out till the next rate meeting? Or do you think that this will likely wrap up in a couple days, couple weeks, a month?
Well,
Have you thought about that?
Two different questions. The first question, to close it out, you conserve cash until you get a better sense for either, number one, how would you renegotiate the entire pot that is due in 2026? Like, how do you renegotiate it? So you conserve cash and you figure out if there's a way to get the rate lower, which is why, I mean, that's why I'm saying in my dream,
the rate from the lenders that you're negotiating with, right?
That's in my dream, they're holding out for a convert, or they're able to get a convert in my dream. Okay. Because that would take your rate lower. And even though it dilutes, it holds the shares at a price that's much higher than this craziness that's going on in the market. Right. Because if you look at how the thing was structured for the last two deals, they structured it 10% higher than the existing price, meaning they were trying to at least create a buffer so that it wouldn't just collapse the stock. So to me, in my dream world, that's how they do it. That's the first thing. That's the first part, right? So that's like, why do I hold cash? Part one. Part two is, in my work, if I thought for sure rates were going up, there's no damn way I would be like, all right, we got to figure this out. But if I think that there's a better than 50% shot that rates go down, then I just give it a half a beat, a quarter, You all
half know a what?
Just give it a minute. Just give it a minute. Give it a minute. Let because right now, if you look at what the economists are saying, the spread of where they think rates is going is all over the map.
So to translate that, what you're saying is AMC could just kind of slow walk this and not be in a rush to cut a deal.
Yeah, I mean, they have to do. Look, in fairness, their runway is they'd really have to cut the deal by the end of the year because you still have to
Right.
close it. You have to have it approved. You got to do the administration on it. All that is true. All that has to happen. But I mean, I think it becomes easier to think about what would AMC do if you are thinking about how would you think about remortgaging your house. You know what I mean? Let's say your house. Let's say you had a 5-year arm and it rolls next year. Do you go ahead? Do you go ahead and or it rolls in 2026? Do you go ahead and refi this year, like in the first quarter, or do you give it a half a minute and just see what happens as the year progresses, given that we're in election year
So
and all these other things?
that's a good wrap up there, May. I think, we covered a lot of ground. We covered a lot of maybe scary scenarios for some people, but at the end of the day, we don't know exactly what's going to happen. We're just trying to give you guys some color of things to think about because, there's not many people going to be talking about all these different scenarios.
Yeah.
I think the go-to is going to be there's going to be two ways of talking about this weekend, May. If I had to guess, there's going to be the people that says, "Oh boy, the lenders are in the room to force Chapter 11." There's going to be those, and then there's going to be the other ones that say this is definitely just going to be take the existing debt and roll it to 2030. And
Yeah.
I just want to have a discussion, and thank you for your time on that. That there could be some middle scenarios that people should be kicking around as potential. And then one thing we don't know is the timeline.
Yeah. I mean, the only thing that I would check if you were really truly believing Chapter 11 is if one of the debt holders was the private equity guys that bought Regal and they thought that this would be a clever way to roll AMC into Regal in some effed up way. That's a possibility, but then I think I think you have the potential for the other debt holders to sue if you did that.
Plus, I don't
That would
know
be
if the
that would be the
FTC or
only.
whoever oversees that stuff would even allow it.
It would be a really weird thing. It would be weird. I'm not gonna lie. But if you were like May, can you mentally imagine a scenario where the debt holders get in a room and decide to Chapter 11? That would be the only scenario I could think of is if they actually owned the other side of it. Meaning, the reason it would have to be the private equity folks that bought the other, like Cinemark, Regal, etc., is because you need someone to operate it on the other side.
Right.
And they need to actually be able to operate it out of bankruptcy. So it's not. It's like if you were going to take it into Chapter 11, replace management, you got to go find a CEO. It's a little bit awkward. Yeah, that's the only thing I can think of. But if you already were like, oh yeah, no, I'm just going to marry this to another company that I own in my portfolio and call it a day, then yeah, you could technically do that. It would suck, and I think you might have to deal with a lawsuit or two, or a
Well,
lot, or 100,
well,
a joint lawsuit. But
that's
I
a
could.
bummer scenario to consider. So leave us with a good,
Sorry,
positive thought going.
sorry. Otherwise, they probably are just going to renegotiate the debt somehow and come back. And it could be ugly. It could be pretty. It's hard to say.
We'll have ongoing conversations as need be, and I'll pull May in. I'm sure follow her on Twitter. It's at Markets with May, right?
Yeah. Thanks, Tony.
And well, feel free to shoot us questions in the comments. Are you streaming this on your channel too, May?
I think so.
So hit her up in the
Well, you
comments.
never
Hit me
know.
up in the comments. Send us a DM. We're both very willing to answer questions and try and help you guys. We're not we don't hate Adam Aaron, but we also don't really, push the more MOAS conspiratorial type theories. We're just looking at the financial statements. We'll do our best to help you. Thank you for your time, May. Thank you to everybody who tuned in, and we will see you on the next one.
Bye, guys. Take care.
Let me figure out how to find my exit. Here we go.
Ah.
Let's go. Yeah. I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it. Fuse like a magnet, lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. I'm never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. I'm only